Bitcoin crashes below $63,000, then ripped back above $69,000. At the time of this post, Bitcoin hovers above $68,000. Meanwhile, governments want Bitcoin reserves. Banks are launching stablecoins. XRP is making cross-border moves. Ethereum is staking like a hedge fund. AI robots are still coming for your job. And Michael Saylor is still buying. Welcome to Midweek Crypto Update. Let's talk about what's really happening. Bitcoin dipped under $63,000 this week. Twitter screamed, "It's over." Then it bounced. Over 400,000 BTC were accumulated between $60,000 to $70,000. That's not retail panic. That's whales building a floor. And of course, Michael Saylor's company Strategy bought another 592 BTC for $40 million. Saylor says Bitcoin is mirroring Apple's Valley of Despair phase. Translation: he believes Bitcoin's price will continue to grow. Either he's building generational wealth or the world's most expensive therapy session. Missouri is advancing a Bitcoin reserve bill. Let me repeat that. U.S. states want Bitcoin on the balance sheet. At the same time, the U.S. Securities and Exchange Commission just streamlined ETF timelines to 75 days. That's a massive shift. And Taylor Lindman is now chief counsel of the SEC's crypto task force. New leadership, faster approvals, less regulation by lawsuit. Coincidence? I think not. This is where it gets crazy. Coinbase stablecoin revenue could surge up to 7x. They also just added stock and ETF trading, crypto exchange, or next-gen brokerage bank. Meanwhile, Crypto.com received conditional approval for a U.S. national trust charter. Translation: crypto is not fighting banks anymore. Crypto is becoming one. And analysts say stablecoins could drive $1 trillion in T-bill demand. Crypto funding the U.S. Treasury. Plot twist of the decade. Mark Zuckerberg's Meta is planning a stablecoin comeback. Diem walked so stablecoin 2.0 could run. XRP is moving quietly. Arizona advances bill for Bitcoin and XRP state reserve. SBI Ripple Asia researching remittances in Japan and Korea. XRP crossing borders via Axelar. Institutional members-only exchange launched documents proposing RLUSD pushing XRP to $5. The narrative? XRP doesn't care about hype cycles. It's targeting banks. But price? Still fighting 150 like it owes it money. The Ethereum Foundation just staked 70,000 ETH. That's treasury management mode. And yes, Vitalik Buterin is moving ETH again. Cue panic tweets. Relax. Founders diversify. That's normal. Meanwhile, corporations are holding millions of ETH on balance sheets. ETH isn't just gas anymore. It's becoming a yield asset. China not dumping U.S. treasuries. Trump admin considering citizenship verification for banking. Binance facing scrutiny over possible Iranian funding. Senators pushing CFTC to ban death-based prediction markets. Regulation tightening globally, but not killing crypto, just shaping it. The Marshall Islands just launched its first universal basic income program to stop outward migration. Translation: please don't leave, here's money. Bullish for crypto? Maybe. UBI plus digital rails equals prime testing ground for stablecoins and CBDC-style experiments. Small nations move fast. Big nations hold hearings for 7 years. Walmart reports high-income shoppers driving sales. Corporate America's new motto? Make more, pay less. Wealthy spouses hiding crypto in divorces. Epstein docs revealing art-backed loans. Everything financial is getting tokenized or collateralized, even your marriage. BlackRock and other giants are quietly buying DeFi tokens. Why? Because tokenization is coming. $300 trillion in assets could move on-chain. Repo markets, settlement rails, cross-border payments. When suits start buying your bags, it's usually not bearish. China unveiled a $173,000 humanoid warm-blooded companion robot. Reports say AI robots may outnumber workers in decades. Jamie Dimon says AI is reshaping JP Morgan Chase's workforce. Texas is about to become the world's largest data center market. Energy loans are exploding. What does that mean? Compute is the new oil. And guess what also loves cheap energy and compute? Bitcoin mining. The infrastructure cycle is building, quietly. The US dollar index is sliding. Gold projected to $6,200 by mid-year. Silver rebounding 18%. Central banks buying gold. Congo. Lebanon. China expanding gold influence. When fiat confidence wobbles, hard assets move. Gold is rising. Bitcoin is consolidating. History rhymes. Let's zoom out. Governments exploring crypto reserves. Stablecoins integrating with banking. ETFs accelerating. DeFi being accumulated. AI reshaping labor. Corporations holding ETH. Bitcoin heavily accumulated at $60,000 to $70,000. Pantera-backed Solana company expanding staking infrastructure in Asia-Pacific. Cardano prepping smart contract upgrades before a hard fork. Solana correcting towards $67.50 support. This isn't a bubble phase. This is infrastructure phase. Crypto isn't fighting the system anymore. It's integrating into it. Final take. If Bitcoin isn't going to zero, then Saylor might be right. If stablecoins hit $1 trillion in treasury demand, crypto becomes macro-relevant. If banks choose XRP rails, cross-border payments change forever. If Ethereum becomes yield infrastructure, Wall Street joins staking season. And if AI reshapes the workforce, digital assets become even more important. We're not in the mania phase yet. We're in the build phase, and the build phase is where smart money positions. If you want weekly and midweek breakdowns like this, no hype, just strategy with a little bold energy, hit subscribe, drop a comment. Are we in the calm before the storm? Are you accumulating? Or is this the start of something massive? Diversify your investments. Stay patient and updated. Do your own research. I'll see you in a few days with another post. Protect your keys. Stay on top of your bills. Altcoin season? Still on probation. And don't panic, sell into whale accumulation. Peace.